Dan, good morning to you. You cover a lot of companies, and Netflix is a key one of those. If you look at the stock performance, pre-market, yes, it's a big surge, but it has been a roller coaster ride for investors over the last couple of years. But over the last 5, it's up huge. So does this reinforce that longer-term uptrend, or is there more of a bumpy road ahead?
Yeah, I think bumpy road ahead. I mean, last quarter was a train wreck. So I think if you look at this, the street was bracing for more softness. You saw some strength, especially international. But I think in terms of competition, especially from Disney and Apple, as well as what we're seeing on the domestic side, I think there's going to be some potential speed bumps ahead for Netflix, in our opinion.
We've talked about this idea that competition was inevitable when it comes to online streaming. It's been developing over the course of the past several years, companies moving towards that model. You've been bullish on Netflix in the past. Why is it now, because of that competition picture, that you now feel as though it's really a bit more of a bearish thesis?
I think it's two things. One is about pricing. If you look at that shot across the bow from Iger and Disney, you look at pricing on that streaming service, much lower than Netflix. And I think that's something that's going to be from a share perspective. They're going to gain significant share out of the box in terms of Disney. And then you look at Apple, too, on pricing. I think that's another one. You combine that could disrupt, in our opinion, along with Peacock and others, about 15 to 20% of Netflix's core customer base. And then, two, you look at this content arms race. I think what's really starting to happen now is that you have more streaming competitors out there that are going to start to get content. You look at what's happening in Friends in terms of that bidding process. That's why I think right now for Netflix, for a company that's really been the only house in the block, there's definitely more competition ahead. And I think you're going to see that in the stock. It's going to be tougher for this thing to move forward, especially with this rising competition in streaming.
First, I mean, Netflix is totally the entrenched, the 800-pound gorilla when it comes to this. They have a defensible market position, some would argue, despite the fact that you have these competitors moving in. What is it now about some of these competitors that make them more formidable? For Apple, for instance, they're going to give away their streaming service to anybody who buys a device, at least for a year. How does that play into whether or not Netflix can have any kind of real move towards subscriber momentum going forward?
Sure, it's a great question. I mean, if you look at Disney and Iger in particular, from a content perspective, especially with Fox, now they have, from a content, really another big sort of content provider that could compete with Netflix. So I think that's significant. You look at Apple, you have 900 million iPhones globally right now that they're going to start to penetrate. So now you have Apple and Disney going after Netflix, which is significant, along with a lot of these other streaming competitors. And I think the difference now is content. You have significant content. We believe potentially you could see 30 to 40% of viewership in Netflix decline over the next 2-3 years. And I think that's really why it's hard for us to be bullish.
Content is king. We've said it so many times before. But for Netflix, it's been a huge focus on original programming, their own studios creating their own content. It might be critically acclaimed. It's certainly driving traffic there. What exactly does Netflix have to do from that original content standpoint to make sure that they keep and grow that subscriber base?
Yeah, they're going to have to replicate. Maybe you look Stranger Things and a bunch of these other sort of key initiatives that they've had that have been successful. They're going to have to continue to replicate on it from an original content perspective. Because right now what's starting to happen is the pricing, as you've seen with Seinfeld, you've seen it with Friends, pricing is continuing to go to the moon in terms of what others are willing to pay. And now with Disney, Apple, Peacock, and others in the mix, this is really going to get a lot hotter in the kitchen for Netflix. And that's why I think you view this as a small step in the right direction. Stock's been a massive outperformer. I'm just saying going forward, there's going to be some darker days ahead as they compete in streaming and I think potentially lose domestic subs.
And really quickly before you let you go here, just for the record for viewers, what's your outlook on Netflix, rating, price target-wise?
Yeah, more negative here in terms of, the equivalent of our sell rating as a firm. And I continue to view this in terms of FANG. I rank Apple, Amazon, and much further down the list is Netflix, where we continue to be cautious on.
All right, Dan Ives, Wedbush, thank you very much.
Thank you.